Good morning. Welcome to IA Global Asset Management's quarterly podcast, where our portfolio managers and asset class experts discuss current market events, trends, portfolio allocation, and outlook. My name is Rose Marcello, and I'm a client portfolio manager at IGAM. My guest today is Maxime Houde, Senior Portfolio Manager, Thematic Investments. Maxime has been a key player in the US thematic strategy since 2017, and today he leads the strategy with the support of two analysts. Good morning, Max.
Hey, good morning, Rose. Happy New Year.
Happy New Year to you too. Today, Max, what I'd like us to look back on is the year that just ended, where US equities performed very well, but also address themes such as very high valuation of US stocks, the potential impact of the Trump administration, and in general, your positioning considering the risks and opportunities that you have identified. Is that a good plan?
Yeah, that's perfect.
Right, maybe I'll start with the US stock market, which experienced a very good performance in 2024, driven by artificial intelligence. And my question for you regarding that is, do you think this is a theme that has run out of steam? Or are there sectors, in your opinion, that are best positioned for 2025?
Yeah, so pretty good year in 2024 and even 2023. It's 2 years in a row of US stock market delivering more than 20%. So it's been a really great performance since 2023. When I look at this performance, obviously a lot of it is coming from AI. We've seen NVIDIA do extremely well. All the what I call the AI supply chain and the power generation. So we're seeing a bit of a nuclear renaissance that has been driving the market. If you look at last year, outside of Palantir that was added at the end of the year in the S&P 500, the best stock was actually Vistra, which is a nuclear power producer. So do I think that the team is at an end? I don't think so. We're only 2 years in. We are still at the building phase that I call, where we're building a lot of data center. We're building the architecture to be able to commercialize those models. And so I do think when I look at 2025, the area that I'm interested is, first off, do I believe NVIDIA could do well? The short answer is yes. Look, they're going to launch Blackwell. They're sold out for 2025. There's going to be a lot of question about 2026. But we're still seeing those AI lab wanting to build bigger cluster, bigger model. So that should drive the demand for GPUs up. So yes, I do think NVIDIA could still work. Will it do 100, 150%? Just by the growth of their earning and the multiple that they are right now, I don't believe so. It's possible, but I don't believe so. But I do believe they could do well. The other area that I think will be interesting is, like I said, I do think where 2025 will be the year of adoption. So we're going to see some AI agent in our day-to-day lives. So I do think software is an interesting area for that. There's going to be some company that will highly benefit from that, but there's also going to be some loser. So it's going to be pretty much a stock picker market in this environment, but I do think there's a lot of opportunity. The other area is actually, when I think about adoption, it's not just software, but I do think we're going to see things like robotic. Full self-driving also with Tesla could be a big surprise. So that's an area where I'm really interested this year. So if I had to summarize, I do think, yes, the team will be strong this year, but I don't expect that it's going to necessarily be the company that highly benefited in the last 2 years that's going to continue to drive the market. I do think there could be a bit of a rotation in more of the adoption phase compared to the building phase that we've seen in the last 2 years.
Interesting. I'd like to turn your attention to valuation within US equities, which is still pretty high. Are you worried about it? And maybe how do you manage the risk of a potential correction in such a context?
Yeah, look, when we look at the valuation right now of the S&P 500, we cannot lie, it's high. Is valuation alone a catalyst for a correction. Usually it's not. But what it tells me is that when we look at the performance of the S&P 500 going forward, especially in 2025, the performance will need to come from earning growth because we don't have a lot of upside on valuation. I actually think that we're probably going to see a bit of a downside on valuation, but we're going to fill it with earning growth. So I'm really focused on companies that have good earning growth prospect this year because I do think that's what's going to trump the market. So that's the way I'm looking at it. I also do believe that we need to take also the context of, yes, we're looking versus history at the current valuation. People will say that it's extremely high. We need to acknowledge also the fact that when we look at the composition of the S&P 500, there's a bigger portion of the index right now that is exposed to innovation and that is exposed to technology, which usually is a better business model, which could warrant a higher multiple for the S&P 500. But my way to manage it right now is really that we're cautiously optimistic and we're focused on company that will be able to deliver a strong earning growth this year.
Yeah. Speaking about profitability and earnings, the US Federal Reserve is expected to continue to lower interest rates. How do you expect this to affect the profitability of US corporations over that period?
Yeah, so when we look about the rate cycle and the Fed cutting rate, I do think it's gonna bring in the market is a broadening of the market. I do think market participants want to own cyclical stock in a recovery, which has had a difficult last 2 years. So I do think once we start to see the cutting of rate, once we start to see impact on the economy, positive impact of that, we're going to see a broadening of the market in cyclicals. So that's an area that I do think we'll see some positive impact from the rate cycle. The other area is usually when you have a cutting rate cycle like that, small cap usually do well. Both of them, I do expect to see more of a pronounced earning revision in the second half of the year. That could drive a transition or a rotation in that part of the market. So I do expect a broadening out of it, and that should favor cyclical and small cap.
Interesting. So I'd like to jump to Mr. Trump. There's a lot of political uncertainty that looms with the arrival of the new administration. Are there specific policies within his plan that could impact the stocks or the sectors that you have under consideration or in your portfolios? And how are you positioned to face that risk?
Yeah, absolutely. I think there's going to be a lot of headlines about tariff. It's an area that we focus right now, obviously, in terms of risk management. We make sure that every company that enters the portfolio don't have a meaningful risk of tariff coming at them. For us, that's mainly in consumer discretionary and industrials and some part of healthcare. So that's one area that we are a bit cautious around that. And we want to make sure that in terms of risk management, we don't have any headline risk hitting us. The other area that I believe is not talked enough and is actually underlooked by the market is the DOGE, the Department of Government Efficiency, that's going to be led by Elon Musk and Vivek. I do think since it's underlooked, there's a potential for surprise that could hit the market. This could lead to some cutting of government budget in certain area like aerospace and consulting firm and just to name a few. So right now we're making sure that we don't have any exposure to that front also because we do expect that there's going to be some cost saving on that front. There's going to be some budget cut, and we don't want to be hit by any headline risk or surprised by the market on that front. So that's really the two pillars that we're concerned right now. But look, it's Mr. Trump will probably tweet a lot. So we need to be agile around around all those announcements. And it's a year that we expect because of that will add a bit more volatility, but we're prepared for it. And right now we're in risk management mode for those type of headline.
Okay, so it's more centered around headline risk management.
Yeah, absolutely.
It was very interesting as usual, Max. Thank you so much for your time.
It's a pleasure, Rose.
Thank you.